welcome back, folks, for a quick check at volatility in the markets as we come into the close today on a Monday. We have seen a big down move in volatility after a pretty bad week last week in the markets. We've seen stuff really have a big rally today. Let's take a look for a second at the E-minis up 57 right now. SPX up 66, NASDAQ up 189 points, with the Dow up 650 points. So this is quite the rally, folks, and not to say that we didn't need a little bit of a rally. Amazon currently up 52 points. Now, what we saw on Friday with volatility was the VIX really way elevated above the VIX futures. We had the VIX spot about 5 points above VIX futures. So even today, with the huge rally and the VIX coming in, VIX currently is down almost 4 points, trading right around, or not trading, but indicated at right around 21, actually exactly at 21 this second. Let's take a look at the term structure real quick here. And we'll go to the chart on that right here. And let's take a look. Okay, so term structure. Now, even with the VIX down almost 4 points, you're going to see that spot's still significantly above all the futures. Not as much in backwardation, but still in backwardation. What happened on Friday was we had such a big spike in the VIX. Now, the futures didn't follow up that up as much as the VIX spike. So your UVXYs and your TVIXs didn't have the big up move that one might have expected with the VIX having the huge spike. So, but what we didn't have as a big up on the way up means we don't have a big down on the way down. So with VIX down almost 4 today, we don't see UVXY, we see down 2 right now. And once again, and TVIX down $1.37. So once again, the term structure reacting and sort of cushioning the move to the upside on Friday, equally cushioning the down move today on the Monday. So we still need to go a ways further to get back into contango here. Once again, with the VIX, this chart that you see here, it doesn't actually show what price spot is. Oh yeah, it does, 21.19, which is pretty close to what it is right now, but we still need a down move of about 2 points in the VIX really before we can see the the VIX have any chance, or the term structure have any chance of coming out of backwardation. So a lot of ground needs to be made up to the downside to get things back to quote-unquote normal. Now, normal is a relative term, of course, and lately normal has been all over the place. So, but that all being said, this move in the markets up today, definitely we've seen the term structure move towards normalization. VIX down 4 points. I mean, if VIX were down 4 points every day, we would be in beautiful shape for us shorts. It's never a bad day when VIX down 4 points for the short vol trade. However, you're not going to see that translating into a lot of P&L for your positions because, volatility was so elevated coming into Friday. A lot of people have discussed how with UVXY down $1.94, their puts are not performing well. And the reason for this is that Friday, as UVXY went way up, the puts performed remarkably well. In fact, with UVXY up a lot on Friday, the puts that I'm long hardly budge. So you don't lose money as this rips to the upside. However, when it goes back down, you don't make money either. That's the way it works. So of course, if we see a continued move to the downside in UVXY, those puts will kick in. It's just a matter of stuff normalizing and sort of catching up, the market sort of digesting stuff. We have like I said, made a big move in the VIX so far today, as ES futures back off just slightly right now, up 55. Um, the VIX currently down 375. So the VIX is, and the term structure is digesting the bounce in the stock market here. It's not so out of whack as it was before, but we still expect to see backwardation as we come into the close here and today. You know, people would talk about how the effects of backwardation for a day or two like this can be offset by slippage. Now, when I'm talking about slippage, I'm talking about how they need to rebalance this. If we're talking about UVXY, it still has leverage of 1.5 times the futures, and so when it goes up, they've got to buy extra futures, and when it goes down, they have to sell extra. And as they buy and sell those futures, they sometimes they lose a little bit of money on that, and that is going to work to offset any backwardation gains for UVXY. So if you're long and you see a 6% backwardation or wherever it was, I think it was around 6% on Friday, now around about 3.5%. Don't expect to necessarily see that reflected in the price of UVXY. Now, of course, 1 day backwardation is basically 1/30th times 6%, so it's small either way. We were more focused on the term structure just to see where we stand as far as normalizing versus being in backwardation. It's not really going to give you any indication of what's going to happen the next day. But for example, we do know when we're in a situation like we were coming into today that even a big down move on the VIX is not going to translate into UVXY or TVIX going a whole lot lower, because it takes a lot to move the needle and kind of reverse the truck and turn everything around to start heading back down on the VIX. So great progress today towards normalizing. Another day or two like today, and we will be back in contango. But let's take a look at the E-minis again, and because we always want to remember that the VIX is a derivative, and so to find out what's really going on, let's look at what it's derived from. So let's look at the E-minis again here. Now, I have been talking about, I just made a video yesterday about 5 tips in a volatile market, and the 5th tip was back out your chart. So here I have the chart backed out. I think this is a 3-year chart here, and you can see that we're still kind of on the highs. You know, there's it's not like we've given back everything in the last 3 years by any stretch of the imagination. And so we'll see if the market sort of stabilizes here. I think historically speaking, and if you look at many market sort of sell-offs, you would kind of expect the market to kind of stabilize here and slowly start gaining ground again. But, you know, nobody knows the future, and nobody can tell exactly. If we do tighten up this a little bit, let's go to the 10-day. Things look a lot graver here. If we do end up in the positive today, which is a pretty safe bet as we only have 20 minutes left in the regular session, this will be the first positive day in quite some time, almost 2 weeks for the major indices. So is today a turning point? Well, we'll have to see. But it is one positive day, which is more than we could say for any days last week. So we will see if the markets turn around. Once again, the damage has been done in the VIX, and any sort of going back to a lower VIX of, say, 15 or 10, that takes a while. You know, for short VIX traders, we're concerned about the days between. And what I mean by that is that boring days where not much is going on are what really fuel us being back in contango. Today, not really a boring day, big up move. did help us because it took the wind out of the sails of the VIX spike, and so the spike is kind of backed off a lot. VIX once again down almost 4 points today, but it will take several days of small rallies or not much going on to really for this fear gauge to kind of calm down. Fear does not stay elevated over long periods of time, but we came very close or past the lows of the February 5th sell-off, and that's very worrisome to many people. And so there is definitely fear in the market, and that's why you saw elevated VIX. If things calm down and stay very calm, then we'll see VIX move lower, but it's not a foregone conclusion at all. Once again, it's hard to get a sense of the narrative here if you just look one day, if you just show up one day and say, oh, let's look at the term structure. But if you start to kind of track it a little bit and follow it over a little bit of time, you start to get a sense of things and how it's going. Once again, if we look back one last second at our term structure, looking very flat, and it will take more of a down move in the VIX for basically what would happen if the market just flatlined here. How would this term structure react? And my contention is that if the market flatlined, the VIX would come in a little bit, and maybe even the back months might go up a little bit. The longer we stay above the average of, say, 20, the more likely it is that the back months start to move up on this structure here. Now, how do the months move around? Well, a lot of it has to do with order flow and paper and how the calendar spreads line up. If one month is way lower than the rest, then you will see people come in and start to buy that month and spread it against other months. But looking for clues here, we've seen the farthest out months hanging out around 18. Now, they did get it to almost 19 on Friday, and they're up about 50 cents from where they were a couple weeks ago. But the longer we stay in an elevated volatility, the more those will slowly start to creep up. But currently, term structure pretty flat, flatter than it was. We've had a big down move in the VIX today, and this is good news towards normalizing, but it takes more than one day to undo the damage of, it's almost 2 weeks of down moves every day, and that was unheard of last year. So, new world. A lot of traders who are newer haven't even experienced this kind of movement, and so there's fear there. But we'll see. Healthy day for the markets. A little bounce here. First up day in a while. Let's see if the markets can put together a couple days like this. There is going to be news out this week. The earnings figures haven't been that bad, but as we know, the market can have a mind of its own. And even if you knew all of the numbers that are coming out this week ahead of time, it still wouldn't necessarily tell you how the market will react. The market is an incredibly complex thing. And to think that one news event or one news story could tell you which way the market's going to go would be an oversimplified way of looking at things, in my opinion. Anyway, I want to thank everybody. We got some great response on the Maria C interview, so thanks everybody for your great response, and stay tuned for more volatility updates. I'm hoping to come on before the market opens tomorrow and become more regular on coming on before the markets open to let you know what we're seeing here and what traders are talking about in the various forums. Please feel free to check out the VIX forum on Facebook. We've gotten a great response. We're up to about 300 people now, which is awesome. A lot of interesting contributions from different people. I just love to see activity on there. I love new people checking it out. I love seasoned pros teaching new people. That's always great. We've got some people working on original statistical analysis, which is another great thing. And so please feel free to come and check out the VIX trade group on Facebook. I will leave a link in the description. And so now, as we head into the close, I will leave you for any closing trades. Thank you for watching, and I will see you soon.